All right, good morning or good afternoon to those on the East Coast. I hope everybody's having a wonderful and blessed day. John Reed here. I'm just so grateful and thankful that you are here today to listen to what OneShare has to offer. I'm going to tell you a little bit of a background. For those of you that don't know OneShare and JAG, for us here at JAG, we're in our 24th year here in Southern California. We actually work with agents all across the country. We have been in the health and life space as well for that period of time. And we have partnered with OneShare from the beginning, basically. I got more people joining here, so let's get them. We're getting them all in here. So I have a special guest on the line, Michelle Burnt. She is the VP of Sales of OneShare. I've known Michelle for, gosh, at least a decade, I believe. An amazing individual. If you ever get an opportunity to meet with and talk with her, as well as Beth, who's also on the line from OneShare, these people are amazing. They are super helpful, super just on the spot to be there to help you grow your business in this space. And I do believe that OneShare and this space is going to be growing by a lot, especially with the upcoming open enrollment period. And the biggest reason why, actually two big reasons why, one is just like here in California, the average rate increase on premiums are right at about 16% for 2025 plans. That doesn't count the double-digit increases in the deductibles, the double-digit increases in the copays, and short-term medical has changed the landscape completely starting in September, this last September, in that several states have restricted short-term medical to only 3 months. And on top of that, some states, like here in California, has no short-term medical programs at all. And OneShare is an amazing alternative to help your clients save money, as well as be able to access health benefits for a short-term basis and avoid tax penalties. I think that's the biggest king. There's a lot of healthshare programs out there in the market today. I think well over 100, but there's only about 4, maybe 5 that meet the ACA requirements that make it where it's not a tax penalty. And that's important because there are 5 states that have reinstated the ACA tax penalty for not having a qualified plan, which OneShare is. So without further ado, I'm going to turn this over to Michelle. You can stop looking at this gorgeous face. At least that's how I look at it. And I'm going to turn it over to Michelle. Michelle, it's all yours.
You are too kind. And you know what? I'm working at home today in a sweatshirt with my big old glasses on. So you look better than me. Hello, everyone.
You look great. Don't sell yourself short.
My name is Michelle Burnt, VP of Sales, and we just celebrated 6 years at OnesheShare Health. And last week was my 6 years at OnesheShare Health. So it has been absolutely amazing to see it grow from literally nothing to October 1st. We just hit $250 million paid in medical bills, which for a healthcare sharing ministry in 6 years is amazing. So today, I actually have a new deck I'm going to show you. I'm always changing things up. I want to tell you what's new at OnesheShare Health because we've got a lot of things going on for open enrollment and especially going into 2025. And then also just a very quick review of our programs to see if this might be a good fit for your portfolio. So I am going to stop sharing the screen for my face and get into the good stuff with the PowerPoint. All right, so share screen, give me 2 shakes here. There we go, and share, and we're gonna present. And we are going to switch display settings. There we go. How do we look, my friends? Good?
You look great. It looks great.
So what's new at OnesheShare Health? Maybe you're brand new to OnesheShare Health. Maybe like John, back in the day, you guys were selling, took a little break, and you're coming back. Regardless, we are here to assist you. But I can assure you, if you are coming back, there is so much that has changed. For a couple of reasons. One, we had a lot of growing pains in the beginning, and now we've got our processes down to a science. But also, healthcare changes yearly. And in order for us to keep up with the 110 healthcare sharing ministries out there and remain in the top 3, you got to keep up with it. And so we have had to adapt to just, governmental changes and just industry changes and financial changes. Every year, healthcare increases a significant amount. Guess what? This year, we lowered our rates. That's unheard of. So I just want to go with today kind of what's new and then dive into our programs. All right, so number 1, we just hit a 4.5 Google rating. Now, you may think, gosh, that's kind of low when you could have up to a 5.0, right? For a healthcare sharing ministry, you don't get 5.0s. And I'm just very transparent. Why? When people don't have their medical bills paid, they get cranky, right? People are more likely to leave bad reviews than good reviews. It's the same thing with the restaurant business. But for healthcare sharing ministries, typically, there's a reason their bill wasn't paid. It could be it was a pre-existing condition. It could be it was within a waiting period. It did not adhere to the statement of beliefs. It could be it was never eligible for sharing to begin with. So there's always a reason. We are very, very excited to be one of the top rated healthcare sharing ministries out there at 4.5. We want to protect that. Again, we just hit our 6-year anniversary as a company, and October 1st hit that 250 million paid in medical bills. Now, you can have 50,000 members, but if you're not paying their bills, that means nothing. So that is the most important stat to us. We have a new program coming out next month, and just this morning they said it's official. It's rolling out 11/1. I'm going to tell you about it today, and next week you'll start seeing those communications sent out. And then last but not least, August 1st, just a couple of months ago, we lowered the rates on both of our programs, the classic and the catastrophic, in several states up to 23%. And guess what? The state that had the highest lowered percentage was California. And y'all know things are expensive in California. So please, if you have not ran a quote for us in a very long time, get in there and run quotes for California. Again, we lowered nationwide, but California was impacted the most. Very, very excited to share that with you. Now, speaking of rates, I want to show you a couple things on here. This map is overall, so let me explain. This is the classic and the catastrophic put together in all age bands. I just wanted to give you this year only, year to date, overall average monthly contribution. So California is looking at $478, Texas $465, Florida $485. And actually, if you want to know our top 4 states nationwide in order, Texas, which makes sense, our home office is there. California is number 2. Colorado's number 3. Florida number 4. California and Colorado do not have a short-term medical option. So that's probably why they're in the top 4 most popular states. So when you think about short-term medical, really dig in deep to that. There are 2 buckets. There are the states, and I think there's 12 now, that have no short-term medical whatsoever, and we are thriving in those states. Like Connecticut, New York, New Jersey, yes, yes, yes. But then the second bucket is those that do have short-term medical, but now it's down to 3 months. And the members are like, we don't want to deal with that, and neither do the agents. You're chasing them every couple of months to redo the app. So we are a great alternative to short-term medical, especially when I show you the new program rolling out. So think about the states that don't have it at all, and think about the states that it's down to 3 months. And by the way, don't forget, you can sell nationwide with just your resident license. So if you're only licensed in California or Texas, that's fine. And then finally, on the left, I wanted to break it down a little bit further for
And
you.
Michelle, real quick, I hate to
Yes,
interrupt. Can I add to
yes,
that real quick? Do you mind? And for
please,
those on
please.
the call, you don't have to have a health license. I know a lot of folks out there have just their life license or just their P&C license, or as Michelle said on the last webinar we had, even a real estate license. As long as you are licensed and have gone through the ethics, which requires you to have that license, you can represent OnesheShare programs. So just keep that in mind, because a lot of folks think, oh, I don't have a health license, I only have a life license, I can't do this. You can do this. I just want to stress that.
Yes, thank you, my friend. And you bring up a really good point when you said life. We have so many agents that sell life, and they've just decided going into open enrollment or even next year, they want to start adding that health aspect, but they want something affordable. Yes, yes, yes. In fact, that's brilliant to bundle it with life, right? Or we have a ton that offer Medicare and they either don't like the way it pays or it's the longest application ever. And they want to offer under 65 products. Yes, yes, yes. I love that. So if you break it down just a little further, the average nationwide for classic monthly contribution is 516 and the average catastrophic 314. Now, again, that's nationwide, all age bands, but just wanted to share that with you. Okay. And by the way, pricing is based on the state they live in, the age of the oldest member, and how many people are enrolling. It takes you 30 seconds, if that, to provide a quote, and only 5 minutes to enroll a member, by the way. Okay, so drum roll. This is our new program, and I should change this, not available in November, but rolling out November 1st. So I'm going to go over with you next our typical classic and catastrophic program. This new program is called the CAT 365. It is an exact replica of our current catastrophic program, but it is a 12-month program with a $25 only application fee. As you guys know, the typical application fee is $125. And remember, I just told you August 1st, we lowered the rates on both programs we offer. So take that, and on top of that, this program is 20% less than the catastrophic. So we are talking extremely low monthly contribution amounts. Very excited about this. Now, a couple things. This is not for people with pre-existing conditions, because think about it, it's only a 12-month program. So if you have someone with a pre-existing condition, you're looking at our typical classic and catastrophic program. If you are looking at someone who's generally healthy and maybe they don't want to renew their short-term medical every 3 months, maybe they're in between jobs, they're contract workers, they missed open enrollment, they are on a very strict budget, whatever it might be, this is perfect for them. So number one, no pre-existing conditions on this. Number two, just being very transparent. If they enroll in this and let's say month 9, they develop a brand new condition. If they renew this, they can't do the CAT 365. They would have to do the regular classic and catastrophic because now they have a pre-existing condition. So just throwing that out there. The program is identical. Even the membership discounts are the same. The prescription, vision, dental, the telemedicine, all of that is still part of this program. And also, people can come and go as they please. This isn't a locked-in contract. They can do 2 months, 12 months. But at the end of 12 months, if they want to renew it, great, as long as they don't have any conditions we're dealing with. So at the end of this webinar, I will open the floor for questions, but this is rolling out November 1st. So when you are providing quotes in your portal, you're going to see 3 programs next month instead of 2 currently. So very, very excited. I think for open enrollment, this is going to open the door for so many opportunities, especially with the short-term medical scenarios. John, any thoughts about this new program?
Yeah, absolutely. I actually think this is somewhat of a game changer in this space. And here's the 2 reasons why. I think this program is going to be outstanding for those seniors, but what we call that, people in the Medicare space know this term called the donut hole. Well, we refer today as the donut hole as those also between ages 60 and 64 that are healthy, Those programs, like here in California, in that age group, are 1,000 plus more per month. This would be a great program to bridge that gap for them until they qualify for Medicare. I think this is going to be huge in that space. I also think it's going to be huge in the under 30 space, where people falling off their parents' programs at age 26 or when they leave and are healthy and just want to make sure that, God forbid, something major happens, they're taken care of. They don't go to the doctor. They don't do prescriptions. So I think this fits two really strong needs in that space on top of the short-term medical. So when you rolled this, when we were at the last advisor meeting and you rolled this out, I got to be honest with you, I got excited because I was like, this, in my almost 25 years in the health space, I think this is truly a great program that can be a game changer in helping clients save money when they're in what we refer to as the donut holes from their age, So I think this is an amazing program.
Yes. And we got to set ahead of the game, right? Like we want to be the leading HCSM out there. And we were the first to move to state-based rates. We were the first to partner with First Health Network, which is a large national PPO network. We are the first HCSM to ever have a 12-month program. Like we're just trying to stay at the top of our game and just make sure that everyone has access to affordable quality healthcare. I mean, at the end of the day, that is the ultimate goal. So we are very excited about this. Okay, so because open enrollment, I cannot believe it. It is 1 week away, you guys. Holy cow. I just want to do a very quick refresher, not getting too much into the weeds, but we know that you guys sell a gazillion programs. You may forget about this, or maybe on the call you're new to this. So just want to briefly tell you about the two programs we offer. And I hope you see that, like, for example, the classic program, I'm on the crown, the far right, which is the top tier of everything we offer. If you compare that to traditional insurance, there is very few loopholes. Like it has all the same comprehensive services that anyone would be looking for. So people will say, well, then why aren't you insurance? Because we are an affordable alternative, right? It's a great question. So let's start with that. We have a 24-month waiting period for pre-existing conditions, and we will talk about that coming up. Number two, we do have a lifetime maximum, as you can see at the bottom, of $1 million. And number three, there are certain things that are just not covered with healthcare sharing ministries. So those three are the main things that stand out to me of like what makes us different from traditional. But when you look at this page, the services we offer, I don't see a lot of difference. So we always say, no, this is not traditional insurance. This is an affordable alternative, but the services they offer and the way they pay their medical bills is very similar to what you already have. And then you help them look up their providers with First Health Network, which is a large PPO network. They see them listed, and you are giving that member the peace of mind of knowing that this is quote, quote, legit. That's what they say. And that their doctors are in network and their bills will be paid. Okay, so the classic program is the most comprehensive because it's the most popular. You got 3 tiers, the basic, enhanced, and crown. Honestly, although the tides are changing, that catastrophic is quickly catching up. As of right now, 80 to 90% of what you would sell would probably be the crown. And Sales 101 would teach you to start at the top and work your way down if that's not a good fit for them. Telemedicine will always be listed at the top because it is the first line of defense for our members. It's not required, but it is absolutely highly recommended because it's $0. Guys, this is available 24/7 from the active date. No referral required. In the middle of the night, you can call in and speak to an actual doctor, and by breakfast, your prescription is already called in at the nearest pharmacy. I saw a stat. Last year, 70% of the reason people went to their PCP could have been handled via telemedicine. 70%. So we're talking respiratory infections, any ear, nose, throat, UTIs, migraines, pink eye, allergies, rashes, you name it. Okay, preventive services. This is 100% shared up to $1,000 per member per program year. So a couple things here. Every single line item you see here is per member, not per family. And number two, as you can see, we don't do calendar year, we do program year. So it could be October to October, January to January, it just depends when they enroll. Chances are you are enrolling someone who's transferring over from traditional insurance. If that is the case, please encourage them to try to get their mammogram and colonoscopy out of the way, because this is the only service at OneShare with a 180-day waiting period. We have to do that to protect us financially. We did not have that in the beginning, and people were racking up $2,000-$3,000 bills and literally canceling the next day. And guess who's stuck paying that? OneShare. So to be good stewards of our dollars, that waiting period is important, but only on this one. We do mammograms, colonoscopies, immunizations, pap smears, physicals, wellness visits. I mean, you name it, colorectal screenings, all of it, very comprehensive. Okay, PCP, we're talking 1, 3, or 5 visits per program year, depending on the tier. Per member, $40, that's it. Specialist, that one is only available on the Classic Crown. $75. And what do you see? Unlimited visits. No referral required. Great example. I always use my kiddos. They are a freshman and a senior. They both see a dermatologist monthly. Perfect example. It doesn't matter how many times they go. They're paying $75, done. Urgent care. 1 or 2 visits per program year a member, $75. That's a great amount for urgent care. And then ER. ER is honestly probably our top selling feature because you are never going to see a visit fee that's $500 or less, right? Probably a couple grand, if not more. So this one is broken into 2 buckets. If the overall bill after negotiations is below $10,000, it literally could be $9,999. The member's responsibility is $500. The other scenario is if the bill exceeds $10,000, then the member must pay their ISA, which you see right below, but the visit fee goes towards that. So let's say the bill is $10,500. I actually do have an ISA of $5,000, but I already paid the $500, so I'm down to $4,500. Once I pay that $4,500, OneShare is paying the remaining $10,000 because the overall bill was $10,500. So I love the individual sharing amount, which stands for ISA, because that acts as the max out of pocket. That's good for them to know. There's no 80, 20, 90, 10, none of that mumbo jumbo, right? And there's no deductible you have to use before the end of the calendar year because we're program year. So the member chooses their ISA at time of enrollment. Higher the ISA, lower the monthly payment. Pretty typical. Now, speaking of ISA, let's talk about the bottom half of this chart. The only time you are responsible for paying your ISA is if you're hospitalized or have surgery, or in the ER case, you exceed $10,000, which chances are you may be hospitalized then anyway, if it's that big of a bill. So I'm very hesitant to use this example. I hope I'm not jinxing my family, but this January, we've been on this program 6 years, and God willing, we have never been hospitalized or had surgery. So us as a family of 4, we have never had to pay our ISA. And it's important to show you that because for us, we're pretty healthy. My husband's a chiropractor, which is awesome. We just pay our typical visit fees. So in our case, we, heaven forbid something happened, we would have to pay the $5,000 each for the ISA, but we've never had to do that because we have not been hospitalized or had surgery. So just kind of want to walk you through how that works. X-rays, labs, and diagnostics. That can go up above or down below because it depends where it is performed in red. If I go to the urgent care or ER and they do an X-ray right there, it's under the visit fee you see listed. If they have to refer me out to one of those things listed, then of course it's a different day, a different doctor, it's subject to the ISA. So it's all about where was it performed. Surgery, hospitalization are 100% eligible after the ISA has been paid. Very important, up to the maximum limit per incident, which you see down below. Now, jumping ahead just real quick, and we'll come back. The maximum limit per incident depends on the tier. So again, we're always going to start with the crown and work down, especially, when I think about accidents, you very, very, very quickly with surgeries, accidents, just any type of hospitalization can exceed that 500,000. I get a little hesitant on the basic and enhanced because in a scenario, you're going to quickly exceed that, and that would be the member's financial responsibility. The maximum limit per incident feeds into the lifetime of $1 million per member. So if I hit $1 million, I'm canceled from the program, but my husband and 2 kids could continue on as normal. So before we talk about maternity, I want to walk you through a hospitalization example. I'm in a car accident. I'm hospitalized for 4 days, and the bill is $300,000. I'm on the Classic Crown, so let's look at that far right. Okay, my ISA is $5,000. I pay it because I have to. I'm down to $295,000. Well, on the Crown, I did not exceed the maximum limit per incident. So guess what, guys? OneShare is paying the $295,000. I only had to pay the $5,000. That's amazing. Okay, now we're going to do the same exact scenario, but this time we're on the Classic Enhanced, the middle tier. Hospitalized, overall bill is $300,000. I pay my $5,000. I'm down to $295,000. The maximum limit per incident on this one is $250,000. So again, OneShare will pay that $250,000, but the remaining $45,000 would be the member's financial responsibility, which still $50,000 out of $300,000 is a lot better than paying the whole amount. So just kind of wanted to walk you through that. And last but not least, maternity. Just like the specialist, it is only available on the Classic Crown. The baby must be conceived after the active date. There's no waiting period. So if the baby comes early, it's okay. It's all one global bill. So the prenatal visits, the hospitalization, the delivery, all that good stuff. Once the mom pays the ISA, then that bill will be eligible. And OneShare will pay up to $5,000 for natural, $8,000 for C-section, and $50,000 for complications. Now, if the baby once born has complications, they are their own individual once added to the program. So if they end up in the NICU, they have their own ISA, and they would get up to the maximum limit per incident on whatever tier they're on. Okay. You may be asking, can someone enroll pregnant? Yes, we would never deny them, but that pregnancy would not be covered. So we have to do our due diligence and make sure the family is aware of that. Before I click on to the catastrophic, I do want to share one thing with you real quick. If you are a member enrolling someone, it is really, really important that you help them choose the right program and tier. Because we offer 2 programs, well, soon to be 3, but there's 3 tiers under each. So when you look at 6 different options, it can be a little bit daunting. They're like, well, how do I know? You help them with that as the agent. And there are 4 questions I encourage you to write down that will help you choose the right one. Plus, these 4 questions will tell you so much about the member that's important for you to know. Number 1, is preventive services important to you? If they say, oh, absolutely, we go every single year for our annual checkup, then we know we're only looking at the Classic program because preventive is not available on the catastrophic. We hope that is the answer everyone gives, but some people just are not into the whole preventive thing. Bummer. So they could be looking at the catastrophic, and that would be okay. Question number 2, how often do you go to the doctor? This question right here is going to give you so much information and probably tell you exactly what tier to put them on. Because if they say, we are in the doctor constantly, I've got 3 kids, we know we're looking at the Classic Crown. If they say, well, to be honest, we don't really go to the doctor that often, we want something just in case, then you may be looking at the lower tiers or the catastrophic. The third very important question, do you currently see a specialist? If they say yes, we are only looking at the Classic Crown. But if they say yes, you have to dig deeper, because if they are seeing a specialist, it could be a pre-existing conditions involved, and then we have to do our work and explain that. And again, we'll talk about that coming up. And the fourth very important question to ask is maternity, and it's twofold. Is there any chance you're currently expecting or trying as a family in the next couple years? So important. So those are the four questions: preventive, PCP, specialist, and maternity, that will probably tell you what program and tier to put them on. Okay, one more program. The catastrophic is the most affordable because it does not offer four things: preventive, speaking of, PCP, specialist, and maternity. Or excuse me, not specialist. Why am I having a brain fart? PCP, maternity, preventive. Beth, I cannot believe I'm having a brain fart.
PCP, maternity, specialist.
Nope, specialist is on there. Urgent care, good gracious. Oh, I'm losing my mind, y'all. It's been a long day already, so my apologies. PCP, preventive, urgent care, and maternity. There you go. Those four are not available on this program. Okay, so as you think of the catastrophic, this is for life's unexpected events. Things you don't plan on happening, but life happens, right? What if you need a hip replacement, knee replacement, shoulder rotator cuff, right? Maybe you have a heart attack, a stroke. You get COVID and you're hospitalized for a day, or heaven forbid, you're in a horrific car accident. Or lastly, you're healthy as a horse, but you develop a new condition. This program will still take care of you in that time of need. My favorite thing about this program is not just how affordable it is, but what do you see at the top? It still has telemedicine. Guys, you will have members ask you all the time, I love how affordable this is, but what if I need to see a doctor? Well, let me tell you about telemedicine. So same thing, first line of defense, $0, actual doctor. The rest going down is due to a catastrophic event. So specialist on this, my kids aren't seeing a dermatologist. That's why we're on the classic. This is, rehabilitation for a stroke or therapy due to a heart attack, something like that. Still unlimited, $75, no referral required. ER, same exact rules we talked about on the last program. ISA, individual sharing amount, and this is per member. On this program, only 2 options as opposed to 3 on the other. X-rays, labs, diagnostics, surgery, hospitalization, all of those can be grouped together, 100% eligible after the ISA up to the maximum limit per incident, which, speaking of, is $150, $250, or $500. Now, remember we talked about the basic, enhanced, and crown tiers. Well, on this program, these are the tiers. When they enroll, which maximum limit per incident do you want? Whichever one they choose, the lifetime sharing maximum will automatically be double the amount. So go straight down the 300, the 500, the million. Okay. Now, both programs I just showed you have built-in discount programs at no additional cost. It's a one-stop shop. The main 3 are the vision, dental, and prescription. Now, it's just a discount program. They're not required to use our vendors, but guys, we've got some really good vendors, especially the prescription one. That RX Valet has saved our members over $275,000 in prescriptions in just 9 months this year. So definitely, look at the discounts. If they find something better, that is completely fine. Okay, last slide, and then we will open the floor for questions if you guys want to start typing those in. I briefly want to talk about pre-existing conditions because very important. We would never deny for a pre-existing condition. Guess why? There are only 2 disqualifying questions on our 5-minute application for members. Number 1, failure to agree with our statement of beliefs, which, by the way, is a requirement of all healthcare sharing ministries. We are known to be the most inclusive out there. We are not here to judge, guys. At the end of the day, we just want to help as many people as possible. So we would not exclude you because you're same-sex marriage. We would not exclude you exclude you because you had a baby out of wedlock, or you're living with someone you're not married to. There are some that are very strict, and that's okay. That's how they function, but we just want to help as many people as possible. So our statement of beliefs, we do not ask their religion, although we are a Christian company. As long as they agree to our 5 statements, which are pretty generic and standard in nature, welcome to OnesheShare Health. The second disqualifying question is tobacco usage 12 months back only. So if they are current, vapor, e-cigarettes, actual cigarettes, marijuana, if not prescribed by a doctor, if the doctor prescribes it and they have proof, that's okay. If they're doing it leisure, no, that's not for a healthcare sharing ministry. So that's it. 2 disqualifying questions: tobacco usage 12 months back, failure to agree with our statement of beliefs. But again, we do not ask their religion, their height, their weight, their income, their gender, none of that stuff. In fact, we don't even ask for their social security number. So pre-existing conditions, there is a 24-month waiting period, but during that time, there are 3 options to get them through that waiting period. The first thing to know is that waiting period is only for that condition. All the other services they can utilize from the start of their program. The first option is called routine maintenance. Now, routine maintenance is only for 3 conditions: high blood pressure, high cholesterol, and thyroid. Those 3 conditions from day 1 can utilize routine maintenance to get their lab work done, to see a specialist or their PCP. Okay, option 2 on this page, virtual primary care. I love this. It is through the app via Clever Health. The app is absolutely free. Everyone that enrolls, we tell them to download it immediately because it has the telemedicine we talked about. It has this virtual primary care, and it has virtual vet, mental health, prescription discounts. It's amazing, so much. So let's do an example. If I'm diabetic, I know I have a 24-month waiting period. I can't wait to see a doctor, nor should I. So through virtual primary care for just $80, which is just like our specialist visit, I can speak to a doctor and they can order my screenings and my labs and, evaluate my insulin and make sure it's the right one and the right dosage. This is established care. So I'm speaking to the same doctor every single time for 2 years. So I love this because it will get them through the waiting period. And then once that's up, it's all fair game anyway. Real quick, do not confuse these 2. Telemedicine is one and done. Acute illness, I get my meds, I'm better a week later. The virtual primary care, while they're both through Clever Health, is ongoing care for a pre-existing condition. And then the third option for that waiting period is our discount programs. You can still utilize the telemedicine, the prescription discounts. That has nothing to do with pre-existing conditions. So if it works for you to utilize those for your condition, do it from day 1. Okay, I know I threw a lot at you in that time period, but just kind of wanted to tell you what's new, what to expect, give you a program overview, and then I would love to open the floor for questions.
We have no questions in the chat box, so I'm not sure there are any. But let me add a couple things. You touched
Please.
on you touched on people from what OnesheShare, not as strict. I'll tell everybody on this call 2 things. One is we have people of different faiths that are on OnesheShare. Like Michelle said, if they believe in the statement of faith. And most religions do, believe it or not, or most religious people do in some form or fashion. They can be on the program. Also, I just want to point out too, when we talked about life before, I will tell you that 90+% of our active clients on OnesheShare also have a living benefits life program that our agents, it just opens up the door. You're saving them a ton of money, and it opens up the door for other sales for you as well. So, and I think this new edition of your 365 plan is going to be a game changer in the healthcare sharing ministry space. I think I truly believe OnesheShare is the best anybody that's worked with us for 25 years knows that we're very particular about who we work with and so forth. And we we love how OneShare is operated. We love how they process the claims. I have clients that have been on them from day one. You talk about telemedicine, Michelle. One of my clients that's been on literally from day one loves telemedicine. Her kids,
I love it.
Yeah, her kids, went through high school on telemedicine, and now they're in college. Actually, one just graduated college, and the other one's still in college. And she works the system. If she goes to a doctor or whatever that may not be in, or doesn't want to bill OneShare, she pays them and then gets it refunded by OneShare. OneShare has been amazing. She touts, and her family touts OneShare and in our community. And she's actually a council person. So you have a great reputation here in our community for sure because of her. So just a great program. I just believe with everything that's going on in the health space, including Medicare, but the under 65 space for 2025, if you haven't looked at what's going to be taking place for 2025 and the rate increases and the changes and what's going on, having OneShare in your portfolio is going to help your clients save money. It's going to help you maintain your business. It's going to help you grow your business. So I highly encourage you to consider it. By the way, the commissions are great. Correct me if I'm wrong, Michelle, but I believe they're 15% level lifetime. And
yes, no drop-offs and no chargebacks.
There you go. And also, your contracts are direct with OneShare. One of the things that we have made sure here at JAG is that you own your book of business from day one. Your contracts are with OneShare. They're not with JAG. Whether you went to OneShare directly or you went through JAG, guess what your commission is going to be? 15%. So you might as well join somebody like us who's been doing this for over 20 plus years that can be there for you and help you. OneShare will be there for you. I know Michelle and Beth. They are just amazing. I can't say enough about them. I am biased. Like I said, I've known Michelle for quite a long time, and just know that they're a great organization. So
oh, you're so kind. One thing I want to tell you guys before we log off, our contracting process is so easy. There's no fees, no cost to you. There is probably an hour or less to become active. So you'll fill out your paperwork, sign your contract, fill out your W-9 so you get paid. They are self-paced training modules you do from the comfort of your own house. You can start and stop them, take a couple knowledge checks, no big tests, nothing like that. So in less than an hour, you can complete the process, which means before open enrollment, you can be up and running. So if you're thinking like, you know what, this might be a good fit, what I would encourage you to do is run some quotes. I want you to see just how affordable this is, especially like in, Texas, Florida, California, but also look at the products you already have in your portfolio. The smartest things our agents do is bundle this with what they already offer. I have seen it paired with, limited med, hospital indemnity, fixed indemnity, cancer, life, vision, dental. I mean, there is nothing this can't be bundled with. So look at your portfolio and see where it fits in.
Yeah, definitely agree. All right, two more things and then we'll let everybody go. First of all, in November, we are so committed, JAG is so committed to this space. In November, we're going to have 3 webinars that are going to do a deep dive into the ACA alternative health space. I encourage you, you're going to get emails. I encourage you to register for that. If you can make it, if you can't make it, still register. You'll get a copy of the video. Like Michelle said, we have decided to make a complete turnaround and do a deep dive into the ACA alternative space, just because we know your clients are going to be looking for alternatives. Michelle talks about Texas. To give you an example, 28%, I just read this, 28% of Texas does not have an ACA plan. Think about that. That is a huge market. Yeah, I just saw that statistic the other day. Something like 18% in Florida do not have an ACA plan, to give you an example. Now, I know California is your second highest state. Now theirs is something like 14 or 13% don't have an ACA plan, but think about the population. That's 6 million people in California that are potential clients for these OneShare type programs. So I encourage you, if you just, you have this in your portfolio, it's going to help your clients. It's going to help you out a lot. So I appreciate you being here today. I really, really am excited about OEP and the opportunities that it gives all of you out there in the field and gives us here as well. And I personally sell as well, so that's why I'm excited about it as well. So I encourage you to take that next step, and you can do that by emailing. You can email us here at agentsupport@jag-ia.com, agentsupport@jag-ia.com, or you can email me directly if you want to learn more or schedule a one-on-one with me. I'd be more than happy to, and you can do that at jreed, the letter J, R-E-E-D, at jag-ia.com. All right, I said that those in attendance are going to be in a drawing for, that's my bag that has the drawing in there for a guest card, and the winner,
Drum roll.
today's drawing is Cecilia Menendez. I love Cecilia. She's been with us for, gosh, probably over a decade now as well. Wonderful tax lady, by the way, if you need her. She does taxes.
Congratulations.
So congratulations, Cecilia. We'll get that a gas card off to you. I know I didn't say how much it was. It's $5. I'm sorry, it's inflation. I'm kidding. We'll get that gas card off to you. Yes, you're welcome. We'll get that gas card off to you in the mail. Anyway, feel free to reach out. We're excited. Michelle, thank you so much. Beth, thank you for being here. And as soon as this recording comes up, we'll get this out to everybody that registered and attended today. Have a wonderful, blessed, and prosperous week, everybody. We're honored that you are here today and gave up time to learn more about OneShare and JAG. Take care. Have a wonderful and blessed day.
Thanks, everyone.